Good afternoon, everybody. Welcome to, again, a very special strategy now here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. And I have yet a new young budding investor. We're going from my old brother Matt, from my 8-year-old son Pete, to now my 12-year-old son Will. Will, how are you?
I'm great, Joe. How are you?
Oh, he called me Joe. I'm going to smack him after the show. No, I'm just kidding. Will, thanks for coming on. Now, Will has shown some genuine interest over in the past about stocks. You know, he asks, and but quietly. It's not like you've been overly aggressive like, Dad, I want to trade. But we've talked about over the years opening up an account and getting you to trade. And so I came across some savings bonds that he had gotten when he was born from various relatives, and it's about $250 in savings bonds. They're fully matured, so they're gaining no more interest. So I thought, well, let's put these to work. And I talked to Will, and I thought, well, we got to understand who Will is from an investor. So the exercise we did with Peter, we did with Will. So Will, if you could actually click on. So Will, we went through a risk analysis, correct?
Yes, we did.
So what we do? We just what did you do? You went through a bunch of questions and just answered them, and we found out that you were risk number 72. So is that conservative? Is that aggressive? Is it, you don't want to take any risk? That 72 is in kind of what range?
I think it's aggressive.
Okay. And do you feel comfortable with that?
Yes.
Okay. So I thought, all right, now that we understand where Will's risk tolerance is, he's willing to take risk and he wants to be aggressive. So looking at individual stocks and then utilizing different option strategies could really fit in Will's wheelhouse. So I asked Will, what's a stock that you know and a product that you may use, using a little bit of a Buffettism where you start to invest in what you know. Now, I think that's a little bit of an overkill, but he immediately said, well, let's look at Nike, right? Because what products do you use from Nike?
Power and the shoes.
Yeah, so you got his ice skates and his shoes. So he's either on the ice or he's running around. And so with that, I said, all right, let's click here and take a look at how the stock's been doing. And the one thing that I pointed out to Will, and Will, what do you see? These bars represent the stock. These lines represent moving averages, as we discussed. The green line is the 20-day. That's a short term. The red line is the 50-day right here. You can look at on this screen. And it's an intermediate term. And the black line is long-term moving average to 200 days. So basically, they just average that out over that time frame. They take the closing price and then divide that by 200. Okay? So all those closing prices over that time period, 250 and 20, and that's how you get the moving average. If the stock is trading, sorry about that. If the stock is trading above these moving averages, that's telling you the trend is bullish. Okay, you got any questions about this so far?
No, sir.
All right, so this green line, what is that?
It's the short term.
Yep. The red line?
It's the intermediate term.
Very good. And the black line?
It's the long term.
Great. So if the stock is trading above, we said it was bullish. If it's trading in between, that's what we call the battle zone. It's kind of like the battle drills. Where are battle drills done in hockey?
In the corner.
In the corners, really tight space, right? You just don't know who's going to come out with the puck, right? Same thing here. That's what's happening with the stock. It's in between the short-term traders, the intermediate traders, and it's still the long-term traders. They're there. They're passive. They're not doing anything. Now, when it goes below, that's telling you that the stock is potentially bearish. It's the tide has turned. The bears have taken control. Right now, you see that the bears have taken control, right? Because where's the stock right now?
Below.
The stock is below, all right? But interesting news came out this week. Amazon might do a direct sales deal with Nike. That could be a pretty big deal, right? That means that they could hit a ton of new customers, and pretty quickly. So you like their products, right? We figured out some shoes that finally fit you right in Nike, and they're not destroyed in a month. Your skates have been holding up. Well, I know you need some new ones, but I said, all right, let's put the $250 to work, and let's do it in Nike. You liked it. You have a forecast that you think it's going to start challenging up in this area, right? It's getting up near that short-term challenge. So I said, all right, well, let's actually talk about doing an option strategy. Now this is a little bit advanced, but what I want you to do is type in NKE. That's the stock symbol for Nike. Okay? I want you to go over here to change single to vertical. Now, I know we've gone over the basics before we came on, folks. I sat and talked with Will about the basics of what a call is, about both buying a call and selling a call, your rights and obligations. I've given him some stuff that he can look at, and we're going to go over this a little bit more in depth. But he understands that if you buy an option based on the strike price that you bought, that's the stock price that if you exercised your right, in this case with buying the call, that would be the price that you buy the stock. And if you sell an option, the strike price that you sold, that's where you have to deliver that obligation. So you're taking it on. And so I wanted to do a spread because Will has limited capital. He could buy, how many shares did we say of the $52 stock? Was it?
5 shares.
5 shares, that's right, because 5 times 52 is roughly right around that 250. It's a little bit more, so we would only buy 4 shares, really, without going over the $250. So we wanted to maximize the ability to utilize his capital, but also, remember, we looked at your risk reward, and you felt that losing about $40 or $50 would be somewhat catastrophic. But then I quoted your fears and said we can bounce back from that. You're young. But if you do it in a high probability type of strategy, like a call spread where you're buying an option and selling one above it, you're giving up that unlimited profit potential, but you're increasing your probabilities of success. The lights went on, didn't they? Yeah. Okay. So actually, I'm going to change this to create my own because I want you to scroll down here, and I'm going to have you look at an options chain. Now, this is the part that we haven't done yet. So, folks, you're going to watch someone place not only his first trade, but his first option order ever. So we're in here, and it's not bringing it up. All right, let's do this real quick. Do me a favor. Let's type in NKE, and here we go. We go create my own. Don't you love live TV?
I do.
Now, I've been criticized by certain family members that I don't allow my guests to talk. So, Will, what are you feeling right now? Do you feel like you're getting this?
Sort of, yeah.
Okay, what part of this are you not, is a little bit uncertain about?
Actually, I really don't know.
Just trying to feel it out?
Yeah.
Okay. So let's scroll down. And what we're going to do, and for whatever reason, I'm going to have to figure out why this is not working. Let me do this real quick. We're going to go to trade options. And again, this is real time, so you're seeing it happen. All right, let's go type in NKE, and we're going to go create my own. And so again, what we want to do here, Will, and this is what's called an options chain. Now, there's different expiration months, okay, as we discussed, but now you're really starting to see it. Actually, I'm going to let you drive. What I want you to do is go to August 18th. This is the expiration date, which is about 57 days. So it gives you time to be right.
Okay.
The stock right here, Will, is trading at $52. That's what everybody sees behind us, right? $52.46. Now, do you want to be aggressive or a little bit conservative because the stock's been pulling down?
I want to be aggressive.
You want to be aggressive. Okay. So what I'm going to suggest here is, since this is your first trade, let's then I'm going to actually, most people would look at this and say, well, wow, I only have to put $40 to buy this $57 call, right? Wow, that's pretty cool. I can buy like 2 of these and still be right around my threshold, or one of them and be on my threshold. But Will, see this thing called delta? That's 17, right? This one right here on the $57.50 calls, it's 17 delta. You know what that means?
No.
That means you have a 17% probability of making any money. Does that sound good?
No.
No. Do you want to put your money in that?
Not really.
No. Now, what happens if I said the $50 strike is at a 75 delta, which means that you have a 75% probability of being in the money or potentially making money, or at least being above the $50 strike price. Does that sound like a good probability?
Yes.
Now, for that, instead of paying $40, you're going to have to pay $355. What do you want to do? Pay less and have a lower probability, or pay more and have a higher potential probability of success?
I think pay less.
Really?
Yes.
You want to pay less. Okay. I'm going to squash this on you, kiddo, because that's what most people that trade options do. You're making mistake number one. You're trying to take the cheap route. You're trying to take the cheap route and save a bunch of money and roll the dice. How many times have you won the lottery?
0.
0. It's a low probability type of transaction. Buying this option at 57.5 and buying the calls. Yeah, if the stock goes above 57.5, you could start potentially making money, especially if it happens fast. But if it just sits here, that's going to rot and you're going to lose $40. Okay? I want to give you the probability of 55, 60, 70, 80% probability of potentially being successful. So what I want you to do is I want you to click on the 355. Just click once. That means you're buying it. Now that's $355. You don't have 355 bucks. No. So what you're going to do is you're going to scroll up here and you're going to be, let's actually look at selling. So click on the $52 calls. Click on it one more time. Okay. So what you're doing is that you're buying these at $355, okay? That's the current offer price. But you're going to sell these at $1.89, which basically means that your total risk in the trade, let's scroll up and put one contract there and one contract here. Your total risk on the trade, right? If you are buying to open one of the $50 calls, selling to open one of the $52.50 calls, is basically going to be $1.66 or $166. Now that's a lot more, it's more than what you're comfortable with from a total net loss. But this is what I'm going to tell you. Your opportunity here is that you could potentially make a profit, right, if the stock stays at or above 52.5. Where's the stock trading right now?
52.42.
52.52. So it only needs 8 more cents. And if it sits there and stays at that price or goes higher, you're going to make $1. So in other words, for your $160 worth of risk, you're going to make $100. Does that sound like a good risk reward? Does it sound like it fits your aggressive nature?
Yes.
Okay. So what I want you to do, though, is I want you to scroll down here, and we're not going to pay the prevailing offer. Click Limit. Put in debit, which is already clicked, 1.55. That's $1.55. That means $155 is what you're willing to pay for this spread. It's a $2.50 spread. This means that you could potentially make $95 on a $155 investment over the next 57 days. You have roughly right around a 56 to 60% probability that you will have a profit by August expiration. Now we'll talk about management after today's presentation, after we walk through this. But what I want you to do is click Review Order. Click on. Click Review Order. Scroll down and look at this. So you're buying one contract of the 50 calls, selling one contract of the $52.50 calls, and what price are you doing it for?
$157.
Okay, and you have $250. So is that under what's in your account right now? Yes. Is it a little bit more? Yes, but this option spread, you break even if the stock goes down $1. So in other words, you won't lose any money. Even if the stock Nike goes to 51.5 by August expiration, you're break even. Okay? You good with this order?
Yes.
Place it. All right, my man. We're working it. Good job.
Thanks.
All right. Hey, folks, that's it for strategy right now. I just had my 12-year-old son place a bull call spread, first transaction he's ever made, and we're going to sit back and we're going to talk about risk management after we get off today's presentation. But this is the kind of process that you can follow when you want to put limited capital, even if it's in an uncertain marketplace, like what we have today. Markets at all-time highs. People just don't know where this market's going to go, but you could still participate this way. And you could be and should be doing this a lot earlier in life than my brother Matt, my parents, and a lot of my clients. They should be looking at this. And so that's why I'm having my 8-year-old, my 12-year-old, and you can't wait until you see who's coming on in the next couple weeks. All right, folks, Will, did you have fun?
Yes, I did.
All right. I'm going to have Will back on, and Will's going to actually walk me through a trade next time. I'm not going to walk him through anymore. I'm going to let him make the mistakes or the progress. But I want to thank you, Will, for coming on today. And if you ever have any questions or if you're interested, you can go to jcusick@moneyblock.com, jcusick@moneyblock.com, or you can always go to MarketStream.live. And on the MarketStream.live, go to premium content. You can actually go in and you can do the actual risk profile that Will did, and I'll follow up with you, and I'll actually put together a portfolio for you. It's a great way to start investing. All right, folks. Thank you, Will. Thanks, everybody, for being on. I'll be on this afternoon for the closing bell. See you then.